If you're thinking about buying a home, one big question might be holding you back. Should you pay off your debt first? You don't have to be debt-free to buy a home, but in some cases, your debt could hurt your approval. So how do you know what to prioritize? Please make sure to watch until the end, as we have great insight to help you get your questions answered. If you're not a subscriber to this channel, now is the time to hit the subscribe button, as we have new information every single week. So now let's dig into some of the key factors so you can make the smartest financial move. So we're talking about debt and credit.
We're talking about debt, but first question for you is, what kind of debt are we talking about? Because there's a lot of debt.
There's a lot of different kinds of debt, but when you qualify for a home, you qualify based on your income, right? You qualify based on your credit, the collateral of the property, and your assets, right?
Right.
So one important piece is the credit piece. So there's good credit and there's bad credit, and there's debt. And the debt versus the income makes up your debt to income ratio. So we're looking at things that would show up on a credit report, such as credit card debt, right? Student loan, car payments, boats, RVs, trucks.
All the fun things.
All the fun, hot air balloons. I saw a hot air balloon one time.
You're kidding.
Yeah, no, I'm not. So all kinds of debts. Now there's other kinds of debts like liens, tax liens, other liens on the property. There's judgments. There's collections. There's all different kinds of debt.
Okay. So how does debt affect the mortgage approval process and the interest rate?
Okay, well, let's go with the mortgage approval process. If you have too much monthly debt obligations that outweighs your ability to pay them, if you don't have enough income to cover your debt, well, that's a problem.
Yeah.
So we're going to look at your debt, all your monthly debt obligations versus your income. Now, when I talk about debt, I'm not talking about a utility bill or a cell phone bill, unless it shows up on a credit report, because those are known expenses. But I'm talking about the ones we said before, like credit cards, student loans, car payments, other mortgages, other things like that.
Yeah.
And so, the important thing to look at is that ratio between that monthly debt obligation versus your income.
Yeah.
And so that's going to dictate whether you qualify for the loan. One thing that dictates whether you qualify for the loan.
Okay. So what types of debt are most important to pay off before you buy a home?
Well, let me take a step back. I forgot to answer the interest rate question.
Yeah.
So it does affect your interest rate, because if your debt to income is on the higher side, a lot of loan types will have what we call rate hits, or it'll add to your interest rate if you have certain debt to income, because it's slightly higher risk to a lender.
Okay.
So it could affect not only your approval, but your interest rate.
Makes sense. So what are some of the debts that are most important to pay off before buying a home?
Well, if you have things like judgments or tax liens or IRS debt, those things are going to have to be paid off. Now, for the most part, not every single time in every single case, but for the most part. But I would tell you, talk to a professional before you do that, because there's right ways to do that and wrong ways to do that. Yeah. These are things that might be able to be done at closing. They might be able to be done with proceeds if you're doing a refinance, with proceeds of the refinance. But if you're purchasing a home, you might even be able to do them at closing as well. So, you can buy the home and you can pay off this debt. If you qualify and you get to the very end, it's done at closing, that might make more sense. But it's important to talk to a mortgage loan professional to make sure that you're paying off the right things in the right ways.
Yeah. Some people might be freaking out trying to save up for the down payment.
Correct.
So they avoid that. But that kind of brings us to our next question. How can someone balance their debt payments while preparing for home ownership?
Well, you have to make your payments, all right? So if you let those payments falter to save for the house, I've seen people do this. They made a mistake of saying they prioritized saving for the house and not paying their bills, and they ran up debt. They couldn't pay their debt. And I was like, well, you have the money saved up. And they were thinking, well, I have to have that 20%. I'm like, well, you can put less than 20% down.
Yeah.
And so there might be mortgage insurance involved, but there's options there. But to balance it, make sure you continue to pay your debt. Talk to a professional. Understand what has to be paid and what should be paid and what could be paid, right? Those are three different things.
Why is it important, and when is a good time to consult with a mortgage professional in this process?
Well, I've alluded to it a couple of times, and you want to make sure you're working with someone that knows what they're doing, that's reputable, that's helping you look out for your best interests and give you all the data to make the right decision. And so I would say it's very good to do that initially, even if you don't plan on buying a house for a year. And a lot of people we talk to say, well, I don't really need to go through this because I'm not going to buy for a year. Yeah, but don't you want to do all the things now to get ready and have time to do it and have a plan so you can do it on your terms versus, coming down the wire, finding that house that you love and
falling in love with it.
Falling in love with the house and say, I got to have this. And you realize, I can't because of these things. Well, if you just talked to the mortgage loan originator a year ago, they would have told you what you need to do to get qualified. Yeah. And if you speak to a mortgage loan originator and they don't give you they say, well, you don't qualify now, and they don't give you a plan, that's not a very good MLO. That's not a good loan officer.
Maybe get a second opinion.
Call us. We'll even, regardless of where you are, call us. We'd love to help you out.
Yeah.
But you need to work with someone that says, look, I understand you don't qualify now, but here's what you need to do to get qualified. And I'm going to follow up with you monthly just to see how you're doing.
Yeah.
So does that make sense?
It makes a ton of sense. Actually, it was great that you brought up the point of being able to pay off debts at closing through the proceeds. That was something that you wouldn't have known had you not talked to a professional ahead of time.
Right. And if you're refinancing, but if you're purchasing home still, you can still pay it off at closing. That way you don't necessarily pay it off unless you have to. I'm not saying to not pay your debts. You should pay your debts, but that might do it in a way where it might not negatively affect your credit, possibly, depending on what it is.
Yeah.
So there's lots of options here, but the question was, when should you talk to a mortgage loan originator?
Correct.
And the answer is as soon as you can. Not when you find the house, not when you're, but when you're thinking about buying a house, but you have these concerns, talk to a good originator that can help you put your either concerns at risk or help you address them.
Yeah. Well, that's all I had for you today.
Cool. Well, thank you. Yeah. Well, look, if you have any questions about this, comments, or concerns, put them down below. We'd love to hear from you. And if you're not a subscriber, now is the time. If you've made it this far, do me a favor, hit that subscribe button, hit the like button, and share it with someone who you think might benefit from this. With that, that's all I got. Thanks, Lindsay.
Thanks for having me.
Thank you. And we'll see you next time.